Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's update our current view on the euro currency. Well, guys, now we see that the suspicions that we have announced yesterday have panned out. So market indeed has failed with the upward continuation, and that pullback was just to respect of the support area, just an attempt to correct the oversold condition that is not comfortable for market. That's why market has shown just a small bounce from this area of support that was right here to the upside, has reached precisely the minimum target of the Jordan stretch pattern, that is the equilibrium between overbought and oversold condition, where the trended oscillator stands at the 0 point. And take a look, continue move to the downside. Market has formed here, you could see the perfect pattern that called the evening star. Okay, that's candlestick pattern. Looks absolutely perfect. Well, there are some significant moments with this price action, so we just will run a bit ahead of the weekly research because they are mostly related to higher time frames. What are they? First of all, if you'll take a look at the weekly time frame, we have discussed this in our thread on the forum, that price action with this fast returning right back was the significant bearish engulfing pattern. The normal price action after the bearish engulfing pattern, and especially when the market forms almost the reversal candle, the downside week on the previous week was the downside week and almost the reversal. We could call it a reversal if market has opened right above the high, but still it has closed below the low of the week before that. That is very significant move on the forex market. Very often markets show the returning retracement right inside of the body of the engulfing pattern. And that move to the upside, as we can see now, hasn't become the continuation to the upside and was just a retracement inside of the body. So now we have the answers on the question that we have in the beginning of the week. We see now that this is just retracement. So if this is just a retracement, how deep move to the downside could happen? Based on the engulfing pattern, the minimum target of this pattern is the length of the bar. So you can see this dashed blue line. If you count it to the downside, you'll get an area around 130.50 area. It's right here. It's very close to the previous low, around 130.30, 130.50 area. That will be, I suppose, the potential target on the weekly time frame. Also, you could treat this price action as some sort of a bit skewed head and shoulders pattern that, as I understand that skewed patterns are very common for the euro currency. This is specific of this market. It's very rare you could see the nice balanced head and shoulders pattern on the euro currency. So that probably you could treat as the head and shoulders as well. From that standpoint, the target will be approximately the same, because the head on the daily time frame is the bar on the weekly time frame. The distance almost equal. Now we see that market has returned right back below the monthly pivot point as well. But before this area will be achieved, and if it will be achieved, we see some intermediate targets, and that target is not very interesting for us currently, at least from the daily time frame perspective, since you can see it stands deeply below the oversold condition. That's why we should focus on a bit closer targets. And the first one stands right here that could be achieved during today's trading session is 132.50, 132.95 area. That is 618 support from this thrusting move to the upside. And take a look the daily average sold. So market could continue move to the downside, especially that move was really significant. What is another significant point from the weekly time frame? Take a look at this level. We know what that is. That is the 134.86, our favorite level. That is the high of the previous swing on the weekly time frame. Market has trying to pass through it, returned right back on the weekly time frame on the previous week, retested it again, and failed again. This price action is rather bearish. If market would return above that area that we have expected previously, that could be just another tune, as we said. That could be the continuation to the upside, but that hasn't happened. Now market turns to the downside. So we have the bearish trend on the daily time frame, we have the bearish trend on the intraday charts. Market not at oversold, so it has a lot of room to continue move to the downside. Hence, I suppose in the short-term perspective we should search the possibility to enter on the short side of the market. Now let's take a look at the 4-hour time frame. On the 4-hour time frame, we see that right around this level that we have just discussed on the daily time frame, level of oversold and the 618 support, stands the weekly pivot support 1. It's 132.57 area, and we have in progress some ABCD patterns that approximately have the targets around this area as well. So this most recent ABCD pattern, A, B, C top, 100% stands right here, 132.95 approximately. 127 stand slightly lower than this area. And if we will take a look at this initial ABCD pattern, A, B, C top, I don't have it on this chart just to keep this chart clear. Well, it has the 127 extension slightly higher than this level. So the 127 targets of that ABCD pattern and that one kind of envelop this area. It's around 132.70, 132.50 area. That is the next destination, I suppose. The reason why I think that market indeed could proceed lower is mostly based on the overall price action on the weekly time frame, overall market behavior, because it's not the bullish currently. And technically, you'll see these long candles to the downside with this ABCD pattern that suggests some strength of the market. So it's very probable that market hardly will hold right at 100% extension and could proceed lower right to this area. Well, I think that this could happen. From that perspective, we need to catch the first retracement on the hourly time frame to possess ourselves on the short side of the market. And here how we could do that. Here's the hourly chart. We see the trend turns bullish. There are two ways how you could do that. The first way is based on Judd Napoli strategy of entering technique that calls bushes. Well, the idea of the technique is rather simple. So you try to enter at the nearest or some fib level while placing the stop above the another one. Since we're not at the oversold, and in fact we're not at the support currently on the higher time frames, market should not show rather deep retracement to the upside. And I think that this level that where market stands right now is 133.68 is very suitable for the potentially for the entry on the short side of the market. Because take a look, that is also the previous swing low. It's also resistance, and that is also, as you can see, this natural area of support resistance. So it has been broken, retested, tested again, support, broken down, retested now again from the low, from below. So that will be, I suppose, nice area. The stop could be placed somewhere above this confluence resistance there on the hourly time frame. That's 133.93, 134.1. That is the confluence resistance. So you could place the stop somewhere above this area. Probably it's better to do above this recent swing high low, above these highs. Beg your pardon. That is a bit aggressive tactic. Another tactic that could be applied is a bit more conservative and give you, from the one point of view, worse entry price, but the trend will be on your side. So you could wait when the market will start move to the downside and shift trend to the bearish on the hourly time frame, so that it will turn in the direction of the daily time frame and then in the direction of the 4-hour time frame. All trends will turn to the bearish side, and then trying to catch the nearest 3-8 retracement from the starting move to the downside. That will be a bit conservative, but you will have the trend on your side, and you will avoid the potential market breakout of this level if we are wrong and if market will continue move to the upside. So choose what you like more. That is a bit more aggressive, but it will give you a better price. More conservative tactic will give you worse price, but safer way from the trend standpoint of view. Well, that's all that I could say currently. We will definitely take the deeper look on the euro currency in our weekly research and take a look on the monthly, weekly time frames, because they will be significant for us now. But in general, that price action looks rather bearish, and it's really all bullish halves were erased by recent price action. So we see now we get the answers on our questions about the current price action. Well, and I think that we should now be tuned on searching possibility to join the downward move on the euro currency.